Well, a day after the Prime Minister announced a 20 lakh crore rupee stimulus package to revive the economy, Finance Minister Nirmala Sitharaman laid out the details in a 90-minute press conference. Now, this was the first installment of the measures, and the next 2 days will see more announcements coming in. Here's what was announced today. Collateral-free loans worth 3 lakh crores for MSMEs, a credit guarantee plan and a fund of funds with an initial corpus of 10,000 crore rupees. The definition of who qualifies as an MSME has been expanded to include more companies. Foreign companies will be kept out of government tenders worth up to 200 crore rupees in a bid to bolster local business. Finance Minister has also said that the stress on self-reliance does not mean that India will look inwards or become isolationist. The government has also promised to clear all dues to MSMEs in 45 days. The Minister for MSMEs, Nitin Gadkari, had told CNBC TV18 last week that this outstanding amount was a large amount. The Finance Minister also announced a 30,000 crore rupee liquidity facility to NBFCs, housing finance companies and microfinance companies. There's also a new credit guarantee scheme for NBFCs and cash-strapped power distribution companies, which will get liquidity infusion of up to 90,000 crore rupees. Builders will get more time to complete their projects. Businesses and workers will see a cut in EPF contribution to ensure more cash is in their hands. The Finance Minister has also announced a few tax measures. These include a cut in the TDS and a TCS, along with the extension of the Vivad Se Vishwas settlement scheme for direct tax disputes. That has now been extended to the 31st of December. The big question now is, how will all of this be financed? When asked about it, the Finance Minister said the borrowing plan, which has been increased to 12 lakh crore rupees, is one way. She promised to reveal more details after announcing more measures over the next few days. Here are the highlights from the Finance Minister.
I have broadly indicated the amounts, but in any case, end of the all the announcements, 4 or 5 announcements, you'll get to know. And in any case, the Honorable Prime Minister has clearly said what is the total size of the stimulus package. Essentially, this is to spur growth and to build a very self-reliant India. And that's where this whole initiative is called as Atmanirbhar Bharat Abhiyan. Certainly when he says Atmanirbhar Bharat, it is not to look inwards and cut India to become an isolationist country. It certainly talks about a confident India which can rest on its strengths and also be able to contribute to the globe.
Well, that's the Finance Minister announcing the first set of measures. The second set is expected tomorrow. Joining me now to take this discussion forward, Ratin Roy, Director at the National Institute of Public Finance and Policy. Ratin, many thanks for joining us here on CNBC TV18. Also with us, the former Vice Chairman of the Niti Aayog, Dr. Arvind Panagaria. Sir, thanks very much for joining us. Ratin, to you first. There is that headline number of 20 lakh crore rupees, and now it has been amply clarified that it does include the previous measures. The small one was the 0.8% of GDP of the fiscal stimulus that had come in from the government, but the larger one was the measures announced by the Reserve Bank of India. Now, on balance, given that context, do you believe that this is enough to provide for the economic situation that we're currently faced with?
Well, there are going to be 3 or 4 more tranches, I understand, so we have to wait for those. What is very clear is that the government believes, or the economic strategy is to make sure that credit is available, perhaps without the kind of security or preconditions or hoops that accompanied the provisioning of credit in the past, with the logic probably being that if companies can use that credit to tide over and see another day, then they are worth saving. The approach announced today, I think, is inconsistent with what this government has. It's not very high on economic spend strength. So it's administrative in nature, redefine what MSMEs are, change definitions with regard to taxation. These are all good measures. They're credible measures. And I'm glad they've been announced, but I'm still waiting for explicit measures that show how income will be supported and national wealth will be supported. But I presume that will come in subsequent tranches.
Yes, we presume that that is in fact coming. But Ratin, on the measures that were announced today, do you believe that at least it will start the process of on-lending with the government having provided guarantees now as part of the MSME package and the NBFC package as well that was announced today? At least some pain linked to the fact that banks were not willing to lend will be addressed. Though the finance minister reiterated today what she's been tweeting about, that there has been a significant sanctioning of loans to the MSME sector, but there hasn't been a disbursal yet because of the lockdown. So do you believe that this is going to at least help the MSME sector get back on its feet post the lockdown?
This is where bureaucratic approaches meet the market. The market and considerations of profitability and survival will decide whether loans can be taken or not. Unlike in a case where the demand for loans is in excess of the supply. So the question of sanctioning, that's a very odd word, a loan, only comes about in an administered system where you administer credit. Now you're in a situation where MSME owners, NBFCs are going to take a call that if I take this additional credit burden on, is this going to help me survive? I think there are good reasons for being optimistic about that. I think that there are, as long as the subsequent tranches of the public interventions announce ways in which aggregate demand is going to be boosted, together with the very important signaling, two things. One, that MSME dues will be cleared in 45 days. I don't know why 45 days. I have some sympathy. I know that government is not efficient. I wish it were 5 days in this kind of crisis, but that's the best I can hope for. And this, again, this sort of very administrative approach of saying it's not going to be the most efficient company. It's going to be an MSME that's going to get orders for tenders worth 200 crore rupees or whatever it is. These are all signals that government is trying to provide MSMEs comfort and credit. So if a combination of comfort and credit persuades entrepreneurs that they can stay in business, they will stay in business. But ultimately, it is their prospects of earning revenue and of being able to sell their product and sourcing the inputs to sell their product that will determine those decisions, not the supply of credit. That is not the binding constraint. So the other parts of the package are very important, even though they may not directly address MSMEs.
You know, we're still awaiting clarity, Ratin, from the government in terms of key estimates, whether it is, the tax hole that the government is dealing with or the growth estimate that the government is factoring in. And we don't have that data as of now. What we do have is the IIP print for the month of March, and we do have that borrowing calendar that has been made available, and that to be reconciled with this 20 lakh crore rupee number that was put out by the Prime Minister. So on balance, how are you reading the math at this point in time, and what it could then mean for the fiscal deficit and then for deficit financing?
I don't think that we have seen the kind of public spending commitments yet that occasion me to ask how those commitments would be financed. And we simply do not know from the government what kind of tax hit it expects, even without providing tax concessions, which it has not provided yet. What it has done is provided cash flow. Revenue hit numbers vary from 25 to 50%, but there's a good reason for that, which is the more the government does to support the economy, the more people will pay taxes because they'll consume more or they'll earn more, and the more firms will be able to pay taxes, and so the rest will be the revenue. So it's a circle, and only government can provide a narrative as to how this circle will go, because ultimately that narrative will be the logic, the economic logic, on which the government would decide an economic strategy to deal with COVID. But you're not seeing that because there is at this moment no economic logic that's been put forth by government. You have an administrative logic, which makes, if you have an administrative logic, then you have a borrowing calendar. That's administration. But that economic logic, how the macroeconomics will work, has not come. And let me give you an example of that. I would say to you that I think we have done a reasonably good job in India of protecting agriculture so far. And if you're able to get that kharif crop sown, then that's that much of the economy protected. Regrettably, that doesn't bring in that much revenue on the income side because we don't have an agricultural income tax, but it certainly does bring in revenue on the consumption side. To the extent we are able to protect organized manufacturing and SMEs and MSMEs and employment, we will also get revenue on the consumption side, to some extent on the income side. Counterbalance that with the fact that we'll have revenue losses on services and that our major metropolitan regions are unlikely to be hubs of economic activity going forward. I could give you an estimate of revenue loss, but there's no point by giving you that estimate. There has to be some kind of a narrative estimate from government. I'm not expecting precision. And then on the basis of that narrative estimate, you would say what we are trying to do to counteract things. But that would be the way I as an economist would look at it. But this is not being done by economists. This is being done using essentially an administrative approach, which is what sort of proto-socialist governments do. So we have to live with it.
Yes, at least at this point in time, we do. But let me also bring in Dr. Arvind Panagaria into the conversation. Dr. Panagaria, many thanks for joining us. I want to get you to explain to me what you made of the Prime Minister's speech, the big thrust on liquidity, land, labour, the big thrust on local, and how that should be interpreted, how foreign investors who are looking at India will interpret this business of self-reliance. What you are making of it, sir?
Look, Shane, so let me first get this issue of self-reliance out of the way. I think the Prime Minister is addressing a very wide audience. A lot of it is rural audience, a lot of it is working class audience and so forth. So, he is invoking certain symbols to some degree, a immediate post-independence period. Jawaharlal Nehru did that. His interpretation was clearly very different, and I don't think the Prime Minister is speaking in those terms. But it is basically, to invoke the nationalist feeling among people and so forth. So that's how I say I don't put too much sort of into that in terms of policy. Now, if there is something to come out of that in terms of policy, I'd like to, then we have to wait. Is this going to translate into massive hikes in tariffs? If so, then I would get really worried. I mean, then I would get worried. But at this point, and given the clarification also, very unequivocal clarification that the finance minister gave, that this doesn't mean isolation, this doesn't mean that we are going back on our trade policies, I think, I would not jump the gun.
Yes, I think it would be fair to say that, and I just did in fact speak with Rajiv Kumar, now at the Niti Aayog, sir, your predecessor, your successor, apologies,
my successor.
And he was also very clear about the fact. Yes, he was also very clear about the fact that he would not advocate a hike in tariffs. What he was advocating is that there should be specific packages for specific sectors, production-linked incentives, which have already been announced for some sectors, perhaps much more of that. But resilience of the domestic supply chain should not come on the back of higher import duties. That was his view as well. But, broadly, from what you heard from the Prime Minister and the measures that have been announced today, what is the biggest takeaway for you?
Shireen, one, the headline figure, the 20 trillion rupees figure, 10% of the GDP, there one has to interpret carefully. It includes apples and oranges. Not all of this is going to go on the fisc. And in fact, a lot of it is actually on the loan account, credit and so forth. So it's not it's not a package in the sense of the U.S. Raising its spending by 10% of the GDP or something of that sort. So that's one. Two, I think there is also this whole issue of fiscal deficit. We need to be careful. We don't know yet what the impact on the taxes is going to be. What expenditures that were originally budgeted in the budget will not be done. I mean, the very fact that boots are not there on the ground means that a lot of the intended expenditures in the first quarter of the current fiscal year are simply not happening. So both taxes and expenditures on the government budget are declining. How much and so forth, we don't know. So I don't get very exercised about this as long as we are being prudent in what we do. Now, coming to the package today, I would say, the objective, quite correctly in my view, has been to ensure that how do we keep the companies afloat in the interim while the hands return to machines. Right now, there are no workers to do much of the work. Some, agriculture, clearly, certain services, things that we are able to do online, we are doing that. Some of the financial sector is moving and so forth. But still, broadly speaking, people are not there at work. So really, it's a matter of ensuring that the companies that are viable do not go under on account of liquidity issues, meaning companies that are in the long run, I mean, they're not stressed on account of their bad books, but simply because they lack liquidity.
Right.
That should not be the reason. So much of that is what is being offered here. The biggest component in this package, in the part one of the package, I would say, is the 3 trillion rupees collateral-free loan. I think, I mean,
Collateral-free, yeah.
Yeah, I mean, that is a large amount, 3 trillion rupees, 3 lakh crore rupees, a very large amount. Plus, the government has said that, 100% credit guarantee cover to the banks and NBFCs on principal as well as interest. So, I think that loan will move. I mean, there's no excuse that the banks or NBFCs have if the government actually gives 100% guarantee on principal as well as on interest. So I think that will move, and that, I think, is the largest, most important component of the package.
Sir, since you talked about banks not having any excuse to on-lend, Rathin and Dr. Panagaria, I've got with me Rajneesh Kumar, the chairman of State Bank of India, who joins us now. Sir, thanks very much for joining us here on CNBC TV 18. Both my guests here talking about how they believe with the guarantee scheme being announced by the finance minister today, banks will have no excuse not to lend. How will this work, sir? If you can lay out both the 30,000 crore rupee plan and the 45,000 crore rupee plan announced by the finance minister, and do you believe that PSBs will continue to do the heavy lifting?
Right. So there was no excuse earlier also, Shireen. We never had any excuse. But I think it is a wonderful move and the best way, where the FM has taken care of the fiscal of the government and at the same time leverage the banking system and the NBFCs to give credit support to MSMEs who are impacted on account of COVID. And this is for those accounts where there was no default as on 1st March. That was the starting period.
Yes.
And 20% incremental credit. The moratorium is for 12 months on principal. Interest will have to be serviced. And 3 lakh crore is roughly the current outstanding, which would be eligible, is about 15 lakh crore. So that is broadly the calculation. And this incremental lending, we will make it a very, very simple, easy, 3-click, 5-click process. And that is where already our IT system has started working on the new product. There some more details would come from DFS and the SIDBI, but at the same time, I think there should not be any difficulty in extending the incremental credit under the scheme to MSMEs.
Okay. Sir, you said that it's going to be a very simple 3-click, 5-click process. By when do you expect this to be operationalized, and what are the details that you are still awaiting from DFS?
No, only the operational guidelines and the controls of the scheme. But what a bank would need to know, which we have the database in any case. From our database, we will generate the list of all the MSMEs who are eligible and what is the amount of eligibility. That all will be drawn from the system. No manual work needs to be done for that. And just to give you an example, if somebody is on 1st March has an outstanding in working capital loan and the term loan taken together, say 50 lakh rupees. So straight away 10 lakh rupees loan. And the pricing, whatever comes in the scheme, so we fix that price, and the entire process will be end-to-end automated. That is what we are thinking in the State Bank of India. So our people at the branch, they will have to do a very minimal work and documentation.
Okay. So on the plan that's been announced as far as NBFCs are concerned, and NBFCs have of course been asking for banks to provide them with a moratorium. You've now decided to do it on a case-by-case basis. But the measures announced specifically for NBFCs today, how significant are those to at least help the NBFCs who are not being able to access any liquidity?
So again, like as far as NBFC is concerned, that case-to-case basis, assessing the cash budget requirement, cash deficit requirement of the NBFCs, that process will continue, and whatever requests we are receiving, we are examining and extending the moratorium. So that is one part. And here there are two things which have been done. One is there was a partial credit guarantee scheme where the asset purchase or the securitized asset, they were covered. But that did not take off, and in the current circumstances, the chances of availment of that facility, that was not very good. But now the liability side, if any NBFC wants to issue a bond, and on portfolio basis, the 20% first loan loss default guarantee is being proposed. So that is that 45,000 crore and 30,000 crore is the fully guaranteed, and that is another scheme. So it could be a combination of all the three: moratorium also, your 30,000 crore and 45,000 crore. The difference between 30,000 crore and 45,000 crore is that under 30,000 crore, I think this will be the full amount which will be guaranteed, and under 45,000 crore, first loss default guarantee of 25% of the portfolio, which the banks will be building up under the scheme.
Sir, given the fact that almost about support of 1.25 lakh crore rupees has already been provided for NBFCs, including the TLTRO 2.0 and previous measures, how much have banks lent in this lockdown period, sir?
No, one thing we have to very clearly understand is that TLTRO was still the credit risk with the banks. And it was a liquidity support which was coming from RBI. There is ample liquidity in the system. So the entire decision-making process of the banks is around how much support we can give to NBFC. And today's measures, they provide that enablement. What also we have to realize that because whatever is being guaranteed by the government, bank don't have to provide any capital. So to that extent, there is a capital saving. So that's why the pricing of all these loans which are guaranteed by the government, it will be very, very competitive. So in a way, indirectly, it is an augmentation of the capital of the banks also. So that's what I'm saying, that you would have heard that एक तीर से दो निशाने, इसमें एक तीर से कई निशाने.
Right. Acha, ek tir se kai nishane. Sir, speaking of signals, bad banks, that's the proposal that's been sent by the IBA to the RBI as well as the government. It will need a capital of about 10,000 crore rupees as per the proposal. Are you expecting this to be part of the next set of announcements? I don't know whether the second tranche or the third tranche. Is there any indication on whether this idea, which was shot down previously, has any currency today?
No, this time it is different. That's what what IBA believes. And why it is different, that this idea could have not been implemented 3 years back. At that time, banks have they were underprovided on their NPLs and distressed assets. Today, in respect of many assets, banks are holding provision in excess of 80% in many cases. And that's why, if the idea of the bad bank is to be operationalized, it can be operationalized in these times. Otherwise, it will never be operationalized. And if you have time...
But have you got any feelers from either the government or the Reserve Bank that while you believe that this is the appropriate time, that they believe it is the appropriate time for the bad bank?
The proposal has just gone. So the RBI government, they would need to study the proposal, and then this is a concept paper, a discussion paper, and there will be many issues which may come up, many questions which may come up. It provides the basis, but I'm not expecting that the next set of announcements, it would cover the decision on the capitalization for the bad bank, because that paper has just very recently been submitted.
Okay, very recently been submitted, so perhaps will not be part of the next set of announcements. Ratin Roy, I want to come back to you and address the issue that Dr. Panagaria very rightly raised on how not to assess what has been announced by the Prime Minister in the same fashion as a US stimulus package, etc. And we've seen many people do that, that how India's stimulus package is the highest in the emerging world and so on and so forth. And to quote him that this is an apples to oranges comparison, and in fact, the impact on the fiscal deficit may not be as bad as the headline number seems to suggest.
The Prime Minister has not announced a stimulus package. The Prime Minister has said that the total volume of resources that will be directed by government to dealing with the economic fallout of COVID, including all the authorities, would be 20 lakh crores. That's not the sort of stimulus package that you have seen in other countries where stimulus, or what I prefer to call support, means income support or working capital support. So if you start counting, then I would say that there's been about 0.68% of GDP in the first tranche, state governments another 0.25, 0.3, and here a very small amount. It's not even, it's nothing in terms of GDP, between 14 and 16,500 crores in today's tranche. So these are not expensive numbers.
Okay.
The biggest hit to the fiscal deficit will come from the tax hit. And I think that's okay. I do not think we need to worry about the fiscal deficit now. What is more important is that the money the government spends on, or the credit the government assures stakeholders, has the outcomes intended. Because, Shri, in economics is a very, very cruel asker. It's not like running the Home Ministry or the Ministry of External Affairs. Come December, India will have either lost some GDP or a lot of GDP or being in negative territory. What we do between now and December to make sure we get the best possible result there is what we have got to judge. And then, when we have got that result, we can take a call on what that means for fiscal prudence, monetary stability, and other things. That is how the macroeconomics of crisis works. And therefore, we have to understand and judge every single measure taken now by the probability that it will achieve the outcome intended, which is to minimize the hit on economic growth and on national wealth. That would be the right thing to do, rather than look at the accounting basis of how these things will be financed. Again, I repeat, we have not used fiscal to the extent where this is even a question now. The only fiscal question is what revenue hit you will get. But remember, even that is what we call endogenous. The more you do to shore up the economy, the more people are able to consume more, and the less people have a hit on their incomes, the more revenue you will collect. And therefore, the metric that we're looking now is very different. The metric with which I will assess this package when it is out is its impact on growth and people's incomes, and therefore then the size of the fiscal hit, not the other way around.
Absolutely. The impact on growth is what is going to have to be assessed. And the finance minister began by saying that this package has been designed to spur growth. The question is, will it deliver on that promise? Ratin Roy, Rajneesh Kumar, Dr. Arvind Panagaria, many thanks for joining us here on The Reset. Appreciate your time. Thanks for speaking with CNBC TV 18. We'll take a break. There's a lot more coming up. Don't go anywhere. But back in a moment.